Contracts, as we know them, are about to disappear. From real estate closings and royalty payments to insurance claims and business lending, smart contracts are quietly replacing everything that once required human enforcement with code that executes agreements instantly, automatically, and without bias. This isn't theoretical. The transformation is already reshaping industries, changing how we work, transact, and collaborate faster than ever before. The traditional agreement, slow, expensive, and fragile. Most legal agreements today involve long delays, third party enforcement, and high administrative costs. Whether it's a real estate purchase, a royalty agreement, or an insurance claim, the process typically involves lawyers and legal documents, manual verification and signatures, paper or PDF workflows, costly intermediaries to enforce terms, even simple contracts like hiring a freelancer or subscribing to a service, can take days to finalize and are vulnerable to disputes, fraud, and failure to execute. Smart contracts eliminate all of that. What we've already seen in action. We've already covered the rise of smart contracts in previous blogs on commercial lending, where platforms like MakerDAO automate loan issuance and monitoring in real-time real estate, where Proppy and others replace the closing process with a smart contract tied to NFT home titles, NFTs, where royalties, access rights, and co-ownership are embedded directly into the code of each token, but now smart contracts are expanding far beyond these early use cases. Smart contracts are taking over more than just asset transfers. They're becoming the foundation of global agreements across industries. Insurance. Smart contracts can automatically verify claims based on real-time data feeds, like weather conditions or flight delays. If a trigger event occurs, the payout is processed instantly without the need for manual intervention. Companies like Etherisk have deployed decentralized insurance solutions for farmers, ensuring faster, fairer payouts. Employment and freelance work. Instead of relying on contracts managed by centralized platforms, freelancers can engage in blockchain-based work agreements where funds are automatically released upon task completion. Platforms like Braintrust and Claros are leading this transition by using smart contracts to protect both workers and employers. E-commerce and subscription services. Smart contracts can enable conditional payments where customers only pay when products are delivered or services are rendered. Refunds, renewals, and access can also be automated without the involvement of banks or payment processors, reducing costs and delays. Escrow and legal commitments. Funds are locked within a smart contract and released only when specific verifiable conditions are met. This removes the need for escrow agents, reduces fraud, and ensures full transparency. Governance and voting. Decentralized autonomous organizations, DAOs, are using smart contracts to tally votes and execute decisions automatically. These contracts ensure that governance is transparent, tamper-proof, and resistant to manipulation, providing a fairer system for both businesses and communities. As smart contracts evolve, they are redefining how agreements are made, enforced, and experienced across the digital and real-world economies. How smart contracts actually work. Smart contracts are pieces of code that live on the blockchain. They are deployed once and can't be changed, execute only when specific conditions are met, work without intermediaries. Platforms like Ethereum, Solana, and Avalanche support smart contracts. Oracles like Chainlink feed real-world data into the blockchain so contracts can respond to off-chain triggers like weather changes, asset prices, or legal filings. This makes smart contracts ideal for triggering payments, managing access, issuing penalties or rewards, automating any agreement. Real-world impact across industries. The adoption of smart contracts is accelerating across major sectors, fundamentally reshaping traditional systems. Finance. Smart contracts automate lending by issuing loans when collateral conditions are met, triggering real-time interest payments, and liquidating collateral automatically if necessary. Platforms like Avi and MakerDAO demonstrate how decentralized finance, DeFi, enables users to borrow and lend assets without intermediaries, while JP Morgan's Onyx uses smart contracts to settle billions in repo transactions daily, freeing up liquidity that used to be trapped in slow legacy systems. Insurance. In decentralized insurance models like Etherisk, smart contracts automatically validate claims using external data, such as weather APIs for crop insurance. Payouts are immediate once verified, cutting processing time from weeks to minutes. Usage-based insurance models are also emerging, where premiums adjust dynamically based on real-time behavior tracked by IoT devices and smart contracts. Employment. Smart contracts manage freelancer agreements by releasing payments automatically upon milestone verification, as seen on platforms like Braintrust and Claros. This model protects both parties, ensuring that workers are paid fairly and clients receive deliverables according to contract terms without intermediaries or lengthy disputes. Real estate. Platforms like Propy are using smart contracts to tokenize real estate titles and automate the entire property transfer process. Rental agreements, escrow settlements, and property sales can now happen peer-to-peer with funds and ownership transferring instantly once conditions are met. Retail. Smart contracts are enabling programmable subscriptions where customers pay based on consumption rather than flat fees. In e-commerce, payment only releases once verified proof of delivery is received, ensuring buyers and sellers have trustless, fraud-resistant transactions. Even traditional institutions are now adapting. Visa and JP Morgan are integrating blockchain and smart contract systems into global payment rails to streamline cross-border transactions. Chainlink powers hundreds of DeFi apps with decentralized Oracle networks, feeding critical real-world data like price feeds into smart contracts. Governments in places like Switzerland and Singapore are piloting smart contract-based regulatory sandboxes to modernize legal frameworks for finance, real estate, and insurance. Smart contracts aren't just improving isolated processes, they're building a foundation for a new global economic infrastructure. Why this matters. Smart contracts don't replace lawyers or insurance agents. They replace everything we relied on lawyers, agents, and other intermediaries to enforce. No more delays, no more paperwork, no more blind trust in people, institutions, or platforms. Just code that executes exactly what was agreed without human interference. We're entering a world where every agreement is instant, auditable, and unstoppable. That's the future of trust. That's the power of smart contracts. You can find the full explanation and more in Christie's new book, Blockchain Made Simple, now a #1 bestseller on Amazon. Order your copy today. On Amazon,